Hello, good morning to all. Welcome to today's Daily Dose of Market Insight. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. So very good morning and happy Friday. Today will be Friday, the 12th of January 2024. So before we start our interesting Daily Dose of Market Insight for today, due to the very volatile price action that we've seen yesterday, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This presentation has not been reviewed by the Monetary Authority of Singapore. All right. Okay, good. So as usual, I will kickstart with a brief overview of what happened yesterday in terms of the performance of the cross asset classes. That means we've got ranging from the major stock indices, the FX, gold, as well as WTI crude oil price, which is the commodity market. And also I will highlight key data that took shape yesterday and earlier this morning. And lastly, I will cover the short-term technical outlook on the various broad-based cross assets. And lastly will be what are the key event and data to look out for today. So let me start off with yesterday's price action on the various cross asset classes. So what we could see yesterday was a very interesting price movement across the globe, across the board. We start to see a bit of risk off coming into the market first after the release of the US CPI data. On hindsight, the headline numbers came in much hotter than expected. But however, what we could see over here is that towards the end, towards the later half of the US market, this risk of because behavior subsided. That means, i.e., we start to see resurgence of market participant coming in to bid up the major stock US indices. Why? Because the Dow Jones Industrial Average, the SPX, the Nasdaq 100, initially they have a maximum intraday drawdown of -7% to -1%, but throughout the later half of the US session, this major stock USA rebounded with the Dow Jones Industrial Average almost unchanged. The S&P also unchanged, and the top performer will be the Nasdaq 100. We managed to close up 0.17%, led by the mega cap stocks. So if you look at the current situation over here towards the end of the US session, what we could see over here is that this is the heat map. All right, so in this heat map over here, the mega cap stocks, especially the semiconductor, managed to actually outperform the general market, which actually triggered this risk on behavior back into the market towards the close of the US session. And also more importantly, I want to highlight over here is that despite the fact that we start to see a very a hotter than expected US CPI data, the liquidity condition globally continues to be on the easing mode. Why? Because if you look at the 10-year US Treasury yield, I'm going to highlight over here, continue to retreat from the key medium-term resistance at 4.06%. So I could see that yesterday, yes, there was actually a spike up initially, but it closed with a bearish candle. So very clearly 4.06%, also right below the 20-day moving average, and price going to inch downwards, lower low. All right, so all in all, what we could see is that a retreat off again from the 4.06% and the 200-day moving average, actually indicating to us that liquidity condition continue to be on the easing side of the story, which also lead to what I call dollar strength weakness coming back into the picture. So if you look at the dollar index as a whole, continue to actually struggle below the 102.65 level. Okay, it refers to break above this 102.65 level. And much more clearer, if I were to actually share with you all the 5-day rolling performance of the dollar across the popular traded currency or the major currency, with the likes of the Aussie, sterling, the Kiwi. So very clearly we could see over here is that the performance of there's this what I call no clear a resurgence of dollar strength coming back into the FX market. All right, so let give it a bit of time to load. All right, so this one here will be as of right now. Let me do the settings over here. As of 12 of December. Okay. Okay, so this is the 5-day rolling performance. So it rolls every 5 days. It's a rolling moving average. So we could see over here is that the earlier spike up after the release of that US CPI data, the dollar strength dissipated again with the one that is performing, the dollar is performing the weakest against the sterling, even though the strongest currency against the dollar yen yesterday failed to actually surpass very clearly the 146 resistance level that we highlighted yesterday. So all net over here, we start to see continuing risk on behavior coming back into the market. Why? Supported by liquidity easing condition, where the 10-year US Treasury yield refused to break above 4.06%, led to further dollar strength dissipating or dollar weakness back into the FX market, as very clear seen from the 5-day rolling performance. Also supported by this ongoing US 2-year Treasury yield premium shrinkage against the rest of the world. Right, so that is the broad-based market that we're seeing over here. Also, we start to see gold prices resurging up again above 2015 level. WTI crude oil price holding above the 70 level. Why? Because of this geopolitical risk tension that is on the uptick in the Middle Eastern region. So later I'll share with you the story over here. Okay, so let's start with the US, the data first from US. So yes, we know that in US over here, the data calendar yesterday's US. So what I could see over here is that the inflation rate came in hotter than expected, 3.4% year on year for the month of December, above 3.1% in November, and above expectation of 3.2%. All right, but however, if you strip out the energy and food core inflation, it actually came in not that bad. All right, so it's 3.9% year on year versus 4% year on year previously in November, just a slight uptick from 3.8% expectation. So if you look at the core inflation rate, right, that is stripping off the volatile, much more volatile item like energy and food, you could see then that it's still in a deceleration trend. All right, over here. So it's about close to about 2.5-year low. So if you look at the trend itself, and most importantly, services inflation, that means excluding housing, services inflation over here. So services inflation actually grew at a slower rate in December. It's down 4.95% from 5.17% year on year November. All right. So it's, if you look at the trend over here, it's also on the path of growth deceleration. So once market starts to decipher a closer look into the various component of the CPI basket, you start to realize that, hey, even though yes, the headline number is getting hotter, but other items inside the basket is in fact within consensus and within the narrative of a growth deceleration mode. So that lead to what I call a continuation of that risk on behavior in the marketplace yesterday. Yes, we also start to see a bit of hawkish Fed speak yesterday from this lady called uh, Mr. Loretta, Mr. Pardon me. So he did mention that March is still probably too early for a rate cut, and also he did mention that she's pretty much concerned about the headline inflation data over here, that the Fed has more work to do. All right, so even this also in line with Bakin and Gooseby, who say that it's too soon to know about much. But however, after market participants decipher the the various component of the CPI basket, that March meeting of a rate cut is still live. Why? Because if you look at the CME Fed Watch 2, that means this is what market participants is actually interpreting based on the pricing of the Federal Reserve 30-day Fed Fund futures market. So if you look at the March meeting over here, market participants are still looking at close to 68% chance of a rate cut. So it's still live, it's not low, it's still above 60%, it's still above the 60% level. So currently market is pricing in a chance of 68% chance of a rate cut to come in the March FOMC meeting. Okay, a slight uptick from yesterday figure of 64.7%. So all in all, right, what we could see over here, yeah, we are now still seeing dovish expectation that's been priced in the market. No change in terms of the risk on behavior, as I shared with you on the broad-based cross asset performance yesterday, despite that hotter headline numbers, headline inflation number. All right. So one thing I want to share with you is geopolitical up risk on the uptick. Why? Because right now you start to see Iran starts to capture an oil tanker off Oman. Okay. And right now we start to see over at the Red Sea over here, the US and UK actually kind of announced a joint strike with this we call it they deem them as terrorists, the Al Houthi over here. Okay, and in response over here is that the Houthi leader voiced a big response to this ongoing any might call targeted strike by US military. And in fact right now let me share with you all, it's actually a joint strike by US and UK, right, due to this. So what you could see over here is that this uptick in geopolitical risk tension is actually benefiting gold and oil right now, but doesn't seems to be hitting on to the stock market. Why? Because the stock market is still primarily much more impacted by liquidity. So liquidity is still on the easing mode right now, as being shown on the US 10-year Treasury yield. All right, that share is still on the downtick below 4.06%. So with that, let's us quickly now jump into the short-term technical outlook that I'll share with you all. So let us start with the FX market first. All right. So over here on the FX market, let's start with the euro dollar. Okay, euro dollar. Okay, so now let me expand my screen so that you guys could see much clearer. Okay, euro dollar. So euro dollar, no change, is still trapped between 1.089 short-term pivotal support level and the near-term resistance, which is 110 figure level. So yesterday price action during the release of the CPI number almost hit that level, then thereafter it came down, touched the near-term support level, which is 1.0940, then rebounded again. Okay, since it didn't break above 110 level, it's still trapped within this range. I don't want to tighten my short-term pivotal support to 1.094. I'll still maintain 1.089. 110 level, got to clear above it to actually see a much more pronounced short-term bullish tone coming back into the picture to 1.1060, followed by 1.1130 on the euro dollar. So net still maintain that short-term bullish outlook on the euro dollar using 1.0890 short-term pivotal support. First resistance to watch 110 figure for sure. Only an hourly close below 1.0890, we'll start to see a resurgence of another leg of minor corrective decline scenario or minor corrective push down or pullback on the euro dollar towards the next support level at 1.0820, which correspond to this very closely to this medium term ascending channel support from the low of 4th October 2023 low as well. Sterling dollar, which is much more bullish compared to the euro dollar, what you could see is that for sure it starts to tick upwards above the upward sloping 20-day moving average and form a higher low right after the ex-post US CPI data. So very clearly, this low is higher than this low and higher than this low. So there's a nice bullish reaction of the 20-day moving average. So I'll be tidy up the short-term pivotal support for today on the sterling dollar GBP/USD using close to yesterday's minor swing low, which is at 26.90. So 126.90 tighten or tidy up key short-term pivotal support level on the sterling dollar. First resistance to watch will be the 28th of December minor swing high at 28.20, 128.20. A clearance above it exposes the next near-term resistance level at 128.85, followed by 129.40. So 128.25 over here was this level. If you go back in the past, is previously this congestion area over here and the 76.4% Fibo retracement of the previous minor medium-term decline from the high of July last year all the way down to the low of October. Okay, so net still maintaining that short-term bullish outlook on the sterling dollar, holding above 126.20. Only an hourly close below 126.20 will negate this short-term bearish outlook to see a choppy minor corrective decline to retest the range support at 126 figure level. Right, Asia Pacific currency, let us start with the dollar yen first over here. So over here at the dollar yen, what we could see at this point in time, yesterday it did that 146 figure level, almost hit that level, but didn't surpass 146.70. So what's 146.70? If you look at the daily chart over here, is the 50-day moving average and the previous congestion area of November and 6th of December. And if you do the Fibo retracement from the high of November, it's close to the 50 close to the 50% Fibo retracement as well. Okay, so net over here is that what we could see now is the bearish momentum starts to resume on the dollar yen for sure. So given the fact that it hasn't break the 148.85, so 148.85 was the first support level that we highlighted yesterday. So now it's testing this level. Unless it's able to have a hourly close below 148.85, then I will use 146 short-term pivotal support resistance for today. So I will be instead I'll be using 146.70, just a bit of excess over here. Okay, given the volatile movement of the dollar yen in the past few days, so give this as a bit of excess instead. Okay, 146.70, which is so close to the downward sloping 50-day moving average. So this will be my short-term pivotal resistance, still maintaining that short-term bearish outlook. Hourly close below the near-term support at 144.85 that is testing right now will expose the next support level in the first step, which is 143.45, which also correspond to, which is a bunch of key elements to watch. Swing low of 9th of January, confluencing with the 20-day and the 200-day moving average. All right, so this will be the two support level to watch for today. So still maintaining that short-term bearish outlook as long as 146.70 pivotal resistance is not surpassed to the upside. However, a clear hourly close above 146.70 will invalidate the short-term bearish outlook on the dollar yen to see a squeeze up for the continuation of this corrective rebound towards 147.40 followed by 148.30. So net still maintain that short-term bearish outlook on the dollar yen. Right now also being supported by the bearish divergence condition that's being flashed out yesterday on the hourly RSI at the overbought level as well. All right, Australia dollar also did a whipsaw push down yesterday below 146.70 before shaping that V-shaped reversal. So I'll be using a bit of excess as well for today on the Australia dollar. Okay, 66.50. Okay, 66.70/50 short-term pivotal support, looking for the potential maintain that potential bullish bias towards the top of the range. The minor range is at 67.50/67.70, this region over here. We need to have an hourly close above this 67.70 to give a bit more impetus for the bulls to retest to actually expose the next intermediate resistance at 68.35, which is the swing high minus swing high of 28th of December and 2nd of January this year. Only an hourly close below 66.50 will invalidate this short-term bullish outlook to see another round of minor corrective decline towards the next support level at 66 figures/65.70, which correspond to the 200-day moving average. Okay, so to sum up, we are still potentially seeing dollar strength being kept at a resistance. That means, i.e., to see continuing of dollar weakness coming back into the FX market. Spot gold, so for sure spot gold, this is the 2015 is indeed the key short-term pivotal support level to watch. Tested, can't break down, which is also corresponding with the upward sloping 50-day moving average. And what's interesting over here is that the near-term resistance 2038 is a key level for the bulls that need to surpass to actually give a bit of impulses coming back to the picture. So no change, still maintaining that short-term bullish outlook on spot gold 2015 for sure, short-term pivotal support level. Only we need to have a clearance above 2038 that was actually tested yesterday, come break and start to flip back down. So an hourly close above 2038 is much needed before the next intermediate resistance to come in at 2016 level in the first step, right? So these are the three key levels to watch for spot gold for today, still maintaining that bullish outlook, holding above 2015 short-term pivotal support. Only an hourly close below 2015 will see the extension of this minor corrective pullback or decline that is in place since from 28th of December high all the way down towards the next support level at 1990/1975, which is confluencing with the 200-day moving average. Now, spot index, benchmark, major benchmark stock indices. So let us start with Asia first, the Hong Kong index. So Hong Kong index, for sure, those who actually followed me a couple of weeks ago, why 16,100 is important? Because this is a long-term ascending trend line support level that is in place since the great financial crisis low, Asia financial crisis low. So let me share with you all again on the long-term chart of the Hang Seng index. I want to stress over and over again. 16,100, this is the monthly chart of the Hang Seng index. Why is it important? Because this level managed to help reverse steep decline since August 1998, which has an important impact on the market. This is the Asia onslaught of the great Asia financial crisis. Managed to help during May 2013, May 2003, not 13, October 2008, the onslaught of the great financial crisis caused by the US subprime troubles, as well as recently October 2022, which is due to the deflationary risk spiral in China, and as well as the stringent COVID-19 lockdown, and also the stringent business practice regulation on the China big tech company. But price level managed to help so far. Okay, it came down towards the late last year, but managed to hold above that, hold at the 6,100 level. Okay, so with that, for sure, this is the level to actually be monitoring. So still no change on the Hong Kong 33 Bitcoin our platform. 16,100 pivotal support. First resistance level to watch 16,500, which correspond to the downward sloping 20-day moving average. You need to clear above it to give a bit of impulses to retest the next resistance at 16,950, 17,160, which correspond to also the downward sloping 50-day moving average and the swing high area of 28th of December and 2nd of January. So all in all, what we are looking here is only a minor corrective rebound in the first step, unless it's able to clear above the 50-day moving average and the 17,160 resistance level. So no change. These are the key levels to watch on the Hong Kong 33 index, using 16,100 as a pivotal support to maintain that short-term bullish bias. Only an hourly close below 16,100 will see a bit of whipsaw on the downside to expose the next support level at 15,500. Okay, German 30. So German 30, a bit of a sideways movement for today. It actually whipsaw below our short-term pivotal support level yesterday. So technical configuration is a bit complex right now since the all-time high of 14th of December, which is at 16,940. It seems to be oscillating within this minor expanding wedge configuration. I could see over here that I draw in these two gray lines. All right, so with that, I will use 16,790 as my upper limit of a neutrality range. So flipping to a neutral range for today means sideways configuration between 16,790 and yesterday's minor low at 16,560. All right, so neutral between these two levels for today on the German 30 index. Interestingly, Wall Street 30, the US benchmark stock indices, still recall yesterday we do have that 37,380 as my short-term pivotal support. Price level almost came that level, hit, rebound. All right, so for sure, 36,380 is a short-term pivotal support to maintain this short-term bullish outlook on the Wall Street 30. First resistance for sure will be the all-time high area at 37,800. Hourly close above this 37,800. Expose or the next intermediate resistance at 38,100. level. So these are the three key levels to watch for today. Maintain that short-term bullish bias as long as 37,380 holds. Hourly close above the all-time high area at 37,800. Next resistance 38,100. Only an hourly close below 37,380 invalidates this short-term bullish outlook to see another round of minor corrective decline towards the next support level at 36,170, which is defined by the minor swing low of 16th of December and 21st of December. What's next for the Nasdaq 100? Same thing, hit our short-term pivotal, Titan short-term pivotal support level, 16,660, which I highlighted on Thursday, yesterday. V-shaped recovery, didn't break below it. Also close above the 20-day moving average, hourly close above it. So for sure, this is indeed a short-term pivotal support to maintain that short-term bullish outlook on the Nasdaq 100, 16,660. All right, as long as 16,660 holds, potentially we could actually still maintain that short-term bullish outlook on the Nasdaq 100. The next support level to watch out for will be at 16,000. Next resistance level to watch out for will be the all-time high area here at 16,990. An hourly close above it exposes the next intermediate resistance at 17,080 / 17,120. Only an hourly close below 16,660 will see a minor corrective pullback and negate this bullish tone to expose the next support level at 16,500 / 16,430, which is the 61% Fibo retracement of this last push out. Okay, over here. All right, so still maintaining that short-term bullish outlook on the Nasdaq 100 as long as 16,660 short-term pivotal support holds for today. Now, one more current market on the highlight will be the Nikkei 225, which is the top performer right now, even performing much strongly than the US benchmark stock indices that we need to take a look at. All right, so I will use a Titan key short-term pivotal support for today at 35,100 level. So what's 35,100 level is close to the lower boundary that it rebounded yesterday. All right, from here, as long as 35,000 short-term pivotal support holds, a clearance above 35,700 and hourly close above it will expose the next resistance level at 36,040, followed by 36,460 / 36,660, which is the top of the upper boundary, which is the upper boundary of this minor ascending channel that I draw from the low of 10th of January. However, an hourly close below 35,000 figure level will invalidate this bullish outlook on the Japan 225 to kickstart a minor corrective pullback towards the first support level. Next support level to watch will be at 34,460. All right, so still maintaining that short-term bullish outlook on the Japan 225 using a Titan key pivotal support level for today to maintain that bullish outlook, which is at 35,000 figure level. Now, WTI crude oil. So WTI crude oil benefiting from the heightened geopolitical risk tension in the Middle East region, continue to inch upwards. So it's still trading in a very wild range. That means a very high volatility movement, flirting with the 20-day moving average. So right now I could see is that it managed to help very clearly by this ascending trendline support level that is from the low, minor ascending trendline support level from the low of 13th of December. So this minor ascending trendline right now is coming to act as a support level at the 71 figure level, which is so close to yesterday's swing low. In fact, yesterday's swing low as well. So I will use a slight Titan short-term pivotal support level for today for WTI, West Texas Oil. Still maintain that bullish outlook towards the near-term resistance at 74.95, followed by the swing high area, the minor swing high of 27 December at 76.05. Okay, this region over here in first step. So I don't want to put it so tight because of the wild volatile movement that we see in the last few days around the 20-day moving average. All right, so using 71 figure, Titan short-term pivotal support level to maintain that short-term bullish outlook on West Texas Oil, with the intermediate resistance to watch will be at 74.95, followed by 76.05. However, hourly close below 71 figure level will see another movement of choppy volatile move to retest the 3rd of January minor swing low at 69.70 level. So it's more like a bottom hit back down to the minor range. This is minor range support level at 69.70. So that actually pretty much sum up for the short-term technical outlook across the broad-based cross asset classes. So what are the key events to look out for today? So for today over here, throughout the US session, what we could see over here is we do have inflation number up from France. It's a finalized number for December, out at 3:45 p.m. Singapore time, and you have a monthly November GDP data 3 p.m. Singapore time. That's for the UK. And after that, you do have a ECB official speech from Lane at 8:30 p.m. Singapore time. Then you do have a factory gate prices. That means the producer price index, producer inflation numbers from US coming at 9:30 p.m. Singapore time. And we also have 11 p.m. Singapore time, another Fed official of Calgary speech at 11 p.m. Singapore time. And do not forget, also around 8 p.m. to 9 p.m. Singapore time, we have the US earnings session kickstarting. That means, i.e., the Q4 earnings in US start to kickstart with the major US banks reporting their numbers before the US session starts. That means it's around 8 p.m. to 9 p.m. Singapore time. So what are the banks to look out for today will be JP Morgan, Bank of America, Wells Fargo, Citigroup, and as well as the all important major financial services institution, BlackRock. All right, all of them will start to report their earnings number before the start of the US session today. Okay, so with that, just nice we come to the 30-minute mark. So that pretty much sum up for our daily dose of market insights for today. With that, have a great day ahead, and I wish you a good weekend as well. And we should speak again on next Monday. Thank you.